you've got the perfect setup. We had a massive bear market. It hit that long-term trend, 2 standard deviations oversold, triggered all the kind of technical signals you want. Right when my forward-looking indicators suggest the economy starts picking up over time, but debasement is going to increase, it's like it's the perfect signal. And now you've got the institutions to come into the space and regulatory clarity in the UK, Europe, Switzerland, Australia, Hong Kong, Singapore, and the US will get it at some point in the cycle. And then the Bitcoin ETF. It's like, okay, this is it. Game on.
Real Vision co-founder and chief executive officer Raoul Pal believes we are now in the perfect setup for a crypto bull market, which would cause massive price rallies for cryptocurrencies like Bitcoin, Ethereum, and Solana. Pal is particularly bullish on Ether and Solana. He believes the many use cases of both networks will give investors at least a 5x rally from previous lows. Pal bases his predictions for the cryptocurrency market on certain metrics, both crypto fundamentals and upcoming macro events. On the macro side, Pal explains that the rapidly aging population and high debt of most of the developing world means a high interest rate environment is completely unsustainable. As such, the macro guru expects central banks, including the US Federal Reserve, to begin reversing some of their strict monetary policies soon. This reversal would of course include rate cuts, so central banks don't have to spend above the GDP growth rate to refinance their very massive loans. According to Pal, we can expect further currency debasement in the United States and other major economies between the end of this year and early 2025, because it is during that period that most central banks will be refinancing their loans. According to Pal's estimates, interest rate cuts and further currency debasement will result in massive gains in asset prices, just as it has done in previous cycles. But there are 2 interesting metrics peculiar to the cryptocurrency, which Pal says are also pointing toward a perfect setup for a massive crypto bull market. The first is the ongoing wave of provision of regulatory clarity for the cryptocurrency industry. We've seen this in the EU, UK, Switzerland, Australia, and Hong Kong, and there have been lots of talks recently to do the same thing in the United States. With clearly stated regulations in these major jurisdictions, more and more institutional investors will be more comfortable putting a portion of their massive portfolios in crypto. Another factor that Pal believes will be especially bullish for Bitcoin and other cryptocurrencies is the approval of a spot Bitcoin ETF. And with BlackRock's and Fidelity's applications, the macro guru says the chances are very high that we get one soon. Pal lays out his case for an impending crypto bull market in a recent interview with Options Insight. The macro guru discusses his everything code thesis and the AI exponential age. As we bring you clips from the interview, don't forget to like this video, subscribe to the channel, and drop your comments and observations in the comments section below. Thanks, and enjoy the video.
The big thesis is, I don't believe with an aging population and high debt that you can have sustainably high interest rates. And I've proven in the everything code, I think proven, that the entire increase of the central bank balance sheet of the US, the UK, and Europe and Japan is just the monetization of interest payments. So what they're doing is just debasing the currency to pay the interest because the interest payments are too high. And that tells you, well, we're either going to get massive central bank printing with rates of 5%, or they're going to have to get rates back down again fast. And that's what I think the game is. I think with trend rate of GDP at 1.75% in the US, you need to get interest rates down to the same kind of level because the government is 100% of GDP in debt. So if interest rates are 1.75% and growth is 1.75%, then all of GDP growth just goes to pay the government debt. That is not sustainable considering the private sector is another 120% of debt. So this is the game in town. That's what the everything code is built on. If you have this framework of understanding that they have to get rates down to GDP growth or below, so that tells you the world doesn't function with rates above 2%, let's say 1.5%. So to absolutely ensure they need to do it, they need to stamp out all inflation expectations now, so then they can cut it down to 1.5%. That's what is going on, because they know they have to refi at 1.5% or less. If not, the balance sheet goes exponential.
When is the refi due then?
It starts at the back end of this year and it's really in 2024 and 2025. Huge problems because you either completely collapse the economy because the government interest payments take out all of economic growth and shrink, plus the private sector, or the balance sheet needs to go exponential, which would be horrific because then asset prices go, you lose control of the system if you're not careful. So this is, I think, the game. This is why Jay Powell is being so obstinate about rates, even though everybody and their dog with a basic understanding of forward-looking economic indicators can tell that, we've killed growth and killed inflation. He just has to get that inflation expectation down so they can cut rates to 1.5%. If he can engineer headline inflation to go negative, which I think is going to happen, he's got the green light to cut back down to 1.5%. Right? It's just once you understand this, and look, Yellen ran the Fed. There is no difference between the BOJ governor and the Ministry of Finance. There is no difference between the Treasury and the Fed. There is no difference between the ECB and the governments. They all are in this together because nothing works unless they do, and they all understand the game they're playing. And why it's called the Everything Code is I backed it out a number of different ways, and it all came up to the same answers. Is okay, we can forecast debasement based on either trend, or we can base it on the interest payments, or we can base it on demographics. They all come to the same thing. And if I can therefore forward forecast liquidity, and liquidity, which is debasement, a lot of people are misusing liquidity in how I think of it. Debasement is how I look. If I can forecast it out to 2026, and the NASDAQ has a 97% correlation, I can forecast assets out to 2026. Now, this is a thesis, a hypothesis, which is why I don't release any of these targets publicly. But what it suggests is it's all one trade. So then, as I said, you just want to buy the biggest performing assets. So I've been saying this beginning of the year, all of last year, this is what's going to happen. And if I look through the asset growth now, so obviously Bitcoin is up 83%. The next biggest is my Exponential Age basket, 71%. Then the NASDAQ, 42%. Then the S&P at 17%. So it's showing itself exactly as I expected. And that's without much monetary stimulus. Basically, monetary stimulus has gone sideways, but year-on-year rate of change is going up.
According to Raoul Pal, further currency debasement, which at the point is a given with all fiat currencies, will cause asset price gains across the board. For some assets, like the S&P, you only get to preserve your wealth. Even if prices are increasing, you are not actually making more money because of the rate at which the currency is being devalued. For other asset classes like bonds, which are mostly appreciating by 3.5%, while the US dollar is being devalued by about 7%, you would instead be losing a lot of purchasing power. The only asset classes that will actually help you preserve and increase your wealth in the face of constant fiat devaluation are tech and crypto. Let's get back to the interview as Pal discusses his predictions for the coming exponential age.
Kathy was kind of at the peripheral for me. I'm a macro guy, right? And tech always looked overvalued. And so I didn't really like it. I understand there was a lot of technology coming and it was an interesting space, intellectually interesting. But as a macro guy, I just didn't understand it. And it was not until I sat down, I saw the debasement of currency and then figured out that the NASDAQ outperforms it all, that I'm like, what do I not understand here? And then I started seeing the big picture, which was what I referred to as the exponential age, this nexus of all these technologies coming together and completely disrupting everything that we know. And that my expectation was back in 2020 that we were going to see the largest pace of technological change the world had ever seen in the shortest period of time. Because many of these technologies had been worked on, but we're now getting ready for public release. And blockchain was one of them. So that was the fastest adoption of any technology the world had ever seen. But my thesis was built around AI, robotics, data, compute, Internet of Things, genetics, genetic science, EV, all of these things, this big picture space. And I realized, oh my God, this is all going to happen at the same time. And how the hell are we going to cope? It's like a fourth turning moment where we completely reimagine everything. And I started writing about that in 2020, and everyone thought I was a total moron. That I was just like a Cathy Wood junkie, and I was, I couldn't see it. I was an idiot. And I didn't buy any until 2022, when I started averaging in from about May into the big sell-off. Because I'm like, here's the opportunity. I usually step back, use a big log chart, put the standard deviation bands on it that I can do easily on my Bloomberg. When it got to about 2 or 3 standard deviations oversold, that's usually like a once in a lifetime opportunity to buy a secular trend. So I started buying a basket of stuff. And then again, people thought I was stupid until got to about November 2022, and AI came, and everyone was like, oh my God. And then by February, OpenAI had gone from 0 to 100 million users in 5 weeks, and the world has changed completely. And that was just the start. I mean, the robots are coming out, self-driving cars. I think it's 1.5 years away now before Tesla cracks that entirely. We're seeing that at a number of different levels. We will see a lot of this stuff accelerating because AI is an accelerant. It's like a foundational layer, compute power, NVIDIA, all of that kind of stuff. The semis, plus the AI level layer, and then the energy layer, which is, the cheaper cost of electricity driven by EV, green energy, and nuclear will lower the cost of energy. And that's going to create a productivity miracle over time. If you think of the world now, we've got aging population, highly in debt, low growth. And productivity has been going down and down and down. So you're going to have to take some pain, and it's going to end up on the central bank balance sheet to do it, which is to subsidize the fossil fuel transition until you do that. The faster you do that, if you look at the inflation adjusted price of oil since about 1960, it's about $40. So that's your fixed cost to all productivity. And technology just means more output per barrel of oil, call it that. So it translates to electricity. If you can drive down that barrel of oil equivalent to $10, the multiplier is 4x. That's fucking staggering. That will change everything for humanity. If you can get the marginal cost of electricity down to near zero, you will change the outcome for society. So I think it's exactly what Europe should be doing. And yes, they will take some pain to do it, and they should do it. The US kind of did this in the 1940s and 50s with the New Deal. They rebuilt the infrastructure from scratch. And what happened was the 1960s, where we started to see a boom, and that really drove America up until 2000 probably.
Raoul Pal expects central banks to begin pumping billions of dollars into the economy anytime soon, which will spur massive rallies in the cryptocurrency markets. Do you think this will be the driver for the next crypto bull market? Let's know what you think in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications, and check out our other crypto-related videos. Thanks for watching.